Welcome back, and we are here today. It is Wednesday, so you know what that means. We are coming to you live, answering all your questions about moving to Georgia, what's going on in the Georgia real estate market. And today we are sharing with you things that you need to know right now if you are planning on making a move to Georgia. Welcome back to the live stream, and I am Sarah Maslowski with KeyPoint Homes Group. You may notice if you're tuning in today, I'm missing my sidekick, Ashley Lazarian, my business partner. She is at home dealing with a washing machine emergency. Apparently, it's flooding her laundry room right now as we speak. So she is dealing with that. I am so lucky to get a chance to spend some time with you this evening. Welcome. And so if you don't mind, let me know in the comments where you are streaming from and where you're watching from. We're so excited to have you joining us here tonight. And so we are sharing with you the 3 things that you need to know about buying a home in Georgia right now. So if you have seen the interest rates, news headlines all across the news right now, you know that interest rates are continuing to rise, and that is impacting the real estate market everywhere. I would love to know where you're watching from and what you are seeing in your local market where you are at. So we are sharing with you today the things that you need to know about moving to Georgia. Please let me know about where you're streaming from and put your comments down below. We would love to give you a shout out and say hello. And of course, the purpose of this live stream is to answer your questions about moving to Georgia and what is going on here in the real estate market. So, what are the things that you need to know right now about making a move to Georgia or about buying a home anywhere? So, let's just jump into it and give you that information, what you need to know. So, number one, the first thing is there are more homes to choose from. So, if you have been on the sidelines or if you've been watching what's been going on in the real estate market over the past year and a half, 2 years, heck, even 6 months ago, things are drastically different. And you don't need me to tell you that, right? If you have seen the headlines, you know the real estate market is drastically different. And 90% of the people that we work with and serve are clients just like you that are watching this live stream. You're thinking about making a move to Georgia. So that puts you in the buyer's position. And right now, you are in a really, really great position to be in as a buyer because you have more homes to choose from. And so, what that means for you is that you get to take your time looking and searching for a house. Now, if we were to back up 6 months, a year ago, we were oftentimes doing home tours with our clients, sight unseen, or showing them that house on a FaceTime tour and then getting them to come out and see that home in person once we had it under contract. And the reason we had to do those things, well, was because we simply had to. The market was moving so incredibly fast. There was so few inventory. You had to quickly get that home under contract. And well, things are different today, right? So having more homes to choose from means that we are able to take our time a little bit more and go out, see houses, sleep on it, make a decision, and you're not having to act as quickly as what you were having to 6 months ago, a year ago in this real estate market. So I pulled some stats from our local MLS system. So this is covering the greater Atlanta area. And I just want to share this with you and show this to you. So you can see this on the live stream here, and I'm going to pull it up bigger on my end because it's really tiny. But basically what this is showing you is that there is way more inventory this year than there was this time last year. So if you think about that, what that does is it equates to you having more homes to see. Um, Dang it, I am not prepared and don't have it big on my end. Give me just a second here. We're going to get it together. Let's see. Thank you for your patience. If you haven't let me know where you are watching from, I would love to welcome you to the live stream and shout you out of wherever you are watching from. So As you can see, this is homes for sale on the market, and you'll see that this is 42% more inventory year over year than what there was last year on the market. So again, this means there's more homes out there to choose from, which is going to put you as a buyer in a really great situation. In times in the past, we were lucky if we had one house that a client really loved. And right now, you have the benefit of going out and seeing 5, 10 houses and picking your favorite two and then kind of deciding and weighing the pros and cons and having two options, whereas maybe before you only had one option. So this definitely helps you. We've got Ryan watching from Jackson, Georgia. Welcome back to the live stream, Ryan. We have Crawlers Customs. They are watching. James and Evelyn are watching in Miami. They are coming up here in December. And we have Anthony joining us on the live stream as well. Thank you. Welcome, welcome. We are happy to have you. So the second thing that you need to know as a buyer and what puts you in such a great position right now is that the bidding wars have eased. And notice that I said eased. So this is not happening everywhere. Bidding wars are not completely gone. The best houses in the best areas at the best prices are still selling for multiple offers. However, in some areas, in most of the rural areas that we serve, we are seeing that bidding wars have drastically gone away, and that you are able to make a great offer on that home. You're able to negotiate a little bit with that seller, and you have a little bit more flexibility and not having to go over asking price. Obviously, interest rates are playing a huge factor into what is going on in the real estate market and why there are not these bidding wars. So let's look at the data from the MLS market. And so this slide right here shows you the median percent of list to original list price. And so you'll see that in October of this year, homes were selling at 98% list price. And if we compare that to a year ago, we were at 100% list price. So that 98% to list price means that, the selling price was 98% of what that home was originally listed for. So back at the peak of the market, we saw that the list price or the sales price to original list price was often above 100%. And so what we were seeing and what that meant for you as a buyer is that every single house essentially that went under contract was over asking price. Right now, we are seeing that at 98%. That is a great thing for you as a buyer. And this all points to that we are moving more towards a normal market. These are signs and indicators of what a normal, balanced real estate market looks like. In the real estate markets 2018, 2019, we saw a typical sales to list price ratio of 95 to 98%. That is, again, a normal market. It's a good thing for you as a buyer. And so the next good piece of information for you as a buyer and what you need to know right now is you have more negotiating power. So you've got more homes to choose from. You're not having to go over asking price, and you have more negotiating power. So what does that look like for you as a buyer in today's market? Well, we just showed you that the sales to list price is 98%. So on average, you can pay 98% of the asking price of the home. And that sales to list price does not take into account seller paid concessions. So think closing cost, buying down your rate. Those are things that go into negotiations, but don't necessarily reflect in that sales to list price ratio. So this is huge for you as a buyer, because what that means is that you're having to come less out of pocket cash if you're getting that seller to pay for your closing cost. And a huge factor right now that's impacting the market, and unless you've been living in a rock, interest rates have increased substantially over the past couple of months. And so what we are seeing and what we are able to negotiate for our clients is sometimes we're able to get both closing costs covered or partially covered by the seller, and having that seller cover an interest rate buy down. So what does that mean for you as a buyer? That means that we can do something called like a 2-1 buy down scenario, where the interest rate is bought down by 2 percentage points over the course of a year by the seller. And so that you're able to get kind of like an easier payment for that first year. Then it gradually increases that next year, and then it goes up again back to that normal interest rate of whatever you locked it in. That's one option. Or you can do a permanent buy down. And so, of course, there's various different scenarios and things that we would have to consider and factor into to decide if this is going to be a good solution for you as a buyer. And of course, we have really excellent lender partners that we partner with you. And part of that consultation process that we have with you as a buyer is looking at your scenario, looking at how much cash you have to close, and what is the best scenario for you and what the best outcome is for your monthly payment as far as what we need to negotiate for you on behalf of you as a buyer. So if you are joining in the live stream, of course, we answer questions every single Wednesday about moving to Georgia, what's going on in the market. I would love to answer your questions as we go through this tonight and share with you a little bit more about what is going on here in the real estate market. We also have Beth watching us from Fort Myers, Florida. Welcome to the live stream, Beth. We are excited to have you here. And then we also have Mark, who is north of Austin. Mark says that my Zestimate declined $24,000 in the past 30 days. I am so glad you brought that up, Brian. So there was a recent, let's see if I can share this with you. All right. So this was a news article the Atlanta Business Chronicle shared as the housing market cools nationally. Here's what is happening in Atlanta. And so you are north of Dallas. I don't know if I can click through these really fast for you, but Dallas was one of the fastest cooling real estate markets in the United States. And so can I get there fast enough? Let's see. Dallas saw over the past 2 years home prices increase in value over 50%. And so there we go. Austin, Texas. 6-month value change, home prices have declined 3%. A 1-year value change, 9%. But value change since March of 2020, 65.8%. So, Mark, you have to consider if your home price has increased 65% in value over the past 2 years, a decline, I don't know what that percentage is for you, Mark, but a decline of that price, you can kind of see that we're kind of just returning back to maybe a more normal appreciation or slowing of the appreciation in your home price. So that is definitely something to consider for you. And surprisingly, the Atlanta market is not in one of those top 30 areas where home prices are falling the fastest. And if you watched our live stream 2 weeks ago, we shared with you information from Zillow and what they were projecting for a year out of what home prices were going to do here in the Atlanta market. And they were predicting that home prices year over year were going to increase by 3%. So one of the interesting comments that we got from that live stream, we got a really great comment from a viewer. And I'm going to share this with y'all because we love this. We love the feedback. We love hearing from you. We love the comments and we love the input and the dialogue. And so Alicia commented that she was going to contact us regarding purchasing a home until you mentioned that you lean on experts that say the houses will continue to rise in value. But I said, hey, they're just being optimistic. Time will tell as we are in a recession. Then you mentioned how rates are historically low. We talked about Astor Parent. So comparing the interest rates to the 80s when interest rates were in the 18%. And she said that this is where she felt compelled to comment. The comparisons are ridiculous as the houses were not as expensive. Homes were on average $120,000 and rates were 10%. Compared to now, homes are above 366 nationwide, but let's face it, the most desirable homes are probably around 400,000 and 7% is already pricing people out. Plus you have inflation. Today's income can't come close to even affording these high priced homes at 4% inflation. So This is such a great comment and really great dialogue for us to have. So, yes, home prices are uh, drastically more expensive than what they were back in the 80s. You could kind of make the comment or comparison that incomes are a little bit higher than what they were back in the 80s. However, incomes have not kept up with the appreciation of home prices and inflation. Um, so home affordability is definitely a huge factor and a huge risk of what we are running into nationwide. We are essentially cutting out the ability for a lot of first-time home buyers to be able to afford to buy a house. In my comment back to Alicia, I talked about how we here in the Atlanta market have a huge influx of investor buyers who have bought up a lot of what would be typical first-time home buyer houses. These investors came in with cash. They've bought these houses and now they are just nothing but rental houses. And these investors are bought these houses to hold on to them for the long haul. This inventory that they bought up in the Atlanta market, and in some areas it was as much as 30% of the inventory over the past 2 years. That is what these investors have bought. So 30% of those houses are gone off the market to never return. Those are now rental houses. And so, that's reducing the amount of homes that the buyers obviously had to choose from and future buyers are going to have to choose from. But that will drastically impact the affordability of houses. And so when we share that experts are predicting home prices to continue to appreciate slowly, they're going to increase slowly, and we still feel like now is a good time to buy, it's because we want you to be able to be that person that is building that generational wealth and that is buying a home when you can, because that American dream of buying that first home is slowly slipping away for some people. And, it may change in the future, but I would guess with the way that we are heading is that it's still going to continue to be increasingly more hard to buy a house. And so, one of the things that I wanted and I felt compelled to share and why we still think that now is a good time to buy is because of exactly what has happened over the past 4 to 6 weeks. We have been saying that interest rates are going to continue to increase. And we have seen that week over week over week as the Fed works to battle inflation. And so, as we've seen those interest rates go up, we've had people comment and take into account, but well, home prices are coming down, or I'm seeing price reductions and I'm seeing price reductions. Well, that is great, but if a home price is reduced and the interest rate goes up, you are paying more for that house. And so I found a really great graphic that displays this. So, taking a look at this graphic, um, the median price of a home in the Atlanta area back in July was around $420,000. And so, if we take that into consideration, $420,000 at a 6% interest rate, which let's say that interest rates hit the sixes and the end of August, that would have put your payment around $2,500 a month, 2518. So if you would have bought that 420 house back in August at that 6% interest rate for 2518, and then you jump forward to today, that same $420,000 house, they've dropped it to 400. And so you're thinking, great, home prices are less. I'm getting a good deal on that. And yet, as of today, the average interest rate is between 7 and 7.25. You are looking at a $2,600 payment to $2,700 payment for that exact same house, even though it's $20,000 cheaper. So you have to keep that into consideration that as home prices fall, but if interest rates are going up, that is not saving you any more money as a consumer. That's actually you paying more money for that exact same house. And that is just so important for you. And we don't want you to be in that situation. So if you are on the fence, or if you are making an immediate move or need to make an immediate move within the next 3 months, we strongly encourage you that if you have options, now is a better time to buy. And so the thought process in that, and we don't come at me in the comments. We often hear in the replays of, oh, we're just out to make money. I wish we could compel as many of you to buy houses as what we could, and yet that is not the reality of our job. Our job is to give you this information to help you make the best educated decision possible for you and your family. But if you have that choice to buy, we obviously encourage you to do that now because we want to save you money. And great thing is that if the interest rates come down 6 months, if we head into a recession, and we know that whenever we head into the recession, historically interest rates come back down, you are going to have the ability to refinance. And so into those lower rates, and then you're going to be happy that you bought when you did. And another thing that experts are predicting is that if interest rates come back down next year, we are still going to have a huge demand problem. Buyers are going to come back out of the gate, and they're going to want to buy the houses because the interest rates are low again. And then we're going to be forced with a huge supply of buyers, not enough houses, and we're going to be back into a situation that we were over 2021 and earlier this year, where you're having bidding wars and people waiving financing contingencies and people, paying over asking with cash, with waiving appraisal contingencies. And so that is going to be the market that we're going to be headed back in. So still stand by the fact that that now is a better time to buy if you can. Obviously, you're making the best possible decision for you and your family. So we're answering questions for you here as you watch the live stream, and we're excited to have you here. Anthony states that he's been looking for homes in Monroe area and noticed that there are a ton of new construction sites showing up in the area. Is Monroe the next big thing? I love that you asked that question. Yes, Monroe is a hidden gem of an area. It is definitely still on the smaller side, and land is at a premium. And so, of course, as you go outside the metro Atlanta area, you have to keep going further and further and further out to find more land to develop new construction homes to meet the demand of all the buyers. And so Monroe is definitely an area where we are seeing a lot of growth and development. We're seeing a lot of housing developments go out there. Slowly, we're starting to see restaurants and shopping centers and things like that go out there. And if you watch any of my videos, you know that I measure an area of a town by how close it is to a Starbucks and a Target. Monroe has neither of those. You're going to have to drive into the Winder area in order to get your Target and Starbucks fix. But I definitely feel that if you are in a place where you can be in a little bit more rural area, Monroe is a really, really great place to be. And you're definitely going to see what I feel is a growing area, and that you're going to see home price appreciation in those areas. So another thing to keep in mind with new construction right now is that almost every single new construction builder that we work with and buyers that we have buying new construction homes are getting amazing incentives from these builders. The builders want to sell these houses. They are paying down interest rates. They're covering closing costs. And it's, again, the thing that you need to know right now about buying. Even though these interest rates are higher than what they were a couple of months ago, you've got builders and sellers willing to chip in the money to help make this a little bit more affordable for you, make it a little bit easier, and get their house sold. So you as a buyer are in a great position right now to really negotiate things on your terms. Ryan asked if there's anything exciting going on in Dawsonville. I think Dawsonville is a great area. There's been a ton of development over the past couple of years in Dawsonville. It is getting a little bit expensive to be in Dawsonville compared to average price points, especially for new construction, but it is in a very exciting area to be in. There's a lot of great growth and development, and you also have access to Georgia 400, which will take you right down into Atlanta, which is so easy, and it makes it for a good commute whenever you're going to things like concerts. And if you're a baseball fan, you want to be on that side of Atlanta because 400 will take you down it makes it easier to get over to the Braves Stadium, which is actually in Marietta, Cobb County, not Atlanta, even though they're the Atlanta Braves. It makes it easier to get over there. So there's a lot of pluses about being in Dawsonville. You're also really close to Dahlonega area and the mountains, and there's just a lot of great proximity things that are close to Dawsonville. Great question. Paul says, can I calculate my asking price at 7 to 9% year-over-year increase from the last purchase price and the current market trend? Will it prevent me from going underwater if the price continues to fall after I buy? So if I were evaluating that, Paul, I would take into consideration that even if I bought a house, going back to that graphic, let's go back to this, the buyer's purchasing power graphic. So even if you bought, well, obviously this doesn't show interest rates going up higher, but let's just assume this was your thought process 6 weeks ago when interest rates were 6%, or 4 weeks ago when interest rates were 6%, and you bought that 440 house, and at a 6% interest rate, your payment would have been $2,600 a month. And then let's say that you waited for that home price to fall, let's say from 440 all the way to 380, but yet the interest rate was 7.5%, which we're not that far off from it being 7.5%. Give it a couple more weeks, and that's where we're going to be at. You're in that exact same payment. So you really have to calculate and factor in the interest rate you're paying. Now, if you're paying cash, that's a completely different story, and you have a lot of negotiating power right now. But if you are financing a mortgage, you really, really have to consider that interest rate. And another factor that I would take into consideration, Paul, is how long are you going to be in this house? If you're only going to be in it for 3 years and you know that you're going to move, maybe this isn't the best time to buy a house. And if you're going to be in there for longer than 3 years, then I definitely think that that's something that you should definitely consider. And you can always refinance your loan if interest rates do go back down. But just know that all the economists and experts that put out data, from Zillow to Redfin to the National Association of Realtors, we're with Keller Williams, so we get a lot of great data from our economists. They are not predicting home prices to depreciate. What we're seeing right now is a slowing of appreciation. That Zillow forecast that we shared 2 weeks ago is showing that in the Atlanta area, and most of the areas that we serve, they're expecting that home price appreciation is going to be around 3% over the next year. And so we've seen 20 to 25% appreciation over the past 2 years. That's unsustainable. And so sometimes a lot of the home prices that you see falling right now are really just agents or sellers who have priced their home at aspirational prices of what they thought they could get based on that 25% appreciation. And really, it's just coming back down to that normal appreciation. But this is really long-winded to answer your question of saying there's really not a good formula that you can base your offer price based on the year-over-year increase, because that also depends on where the house is and what the annual appreciation was. But anyways, we would love to consult with you one-on-one and give you a little bit more information about that and help you walk through those scenarios a little bit more, given where you are looking at and what's going on in that market. All right. We have a viewer, Manupriya, I hope I pronounced that correctly, looking in the Acworth area to potentially buy my first home. Do you know how that area is? Yes, Acworth is really great. We have an amazing agent on our team that serves that area. And so we would love to help consult with you down in that area. It is a lot going on there, and it is great opportunities to buy right now as well. And so we would love to connect with you and help you in that area. Let's see here. So if you're watching, please ask your questions away. We are excited to answer your questions. Let's see here. Crawlers and customs. Are there any strategies to battle against cash institutional investors when shopping for a home beyond buying cash as well? We own our home and plan to sell it and finance the difference. So, so the good news is that institutional buyers have really slowed right now. They're being very conservative with their cash, and they are waiting out the market right now. So we are seeing them drastically pull back the areas that they buy in, the prices that they're offering for homes to sellers. And so, really, the challenge that we had over the past 2 years is that these institutional buyers, at least in the Atlanta market, have been here for the past 5 years. And previously, these institutional buyers would offer 85% of a home's value and offer a cash offer. Well, what most sellers at that time would say, no, I'm not going to sell it to you for 85% of the value. I'm just going to go on the market and get the true market value for my home. And a seller would net more money by not selling to these institutional buyers. Now, some sellers still would, though, because medical issues, they needed to sell quickly, divorce situations, death situations. There's always reasons why people will give up money for that convenience. And so we have seen that these institutional buyers have kind of returned. So the past 2 years, institutional buyers saw that rents were going up. They saw the great opportunity. Cash was so low, or such a low cost to borrow against, that they can make these cash offer investments because interest rates were so low on the business side. And they saw what a great opportunity it was to capitalize on the rental market right now. And so they were paying fair market value, sometimes even over fair market value for homes. And they were able to gobble them up that way. Well, they pulled back, and now they're going back to how it used to be a couple of years ago, where they're back to offering 85% of the value of the home. So we're not seeing much competition with institutional buyers anymore. So that's a good thing for you as a buyer, and that you don't have to combat that. Now, we do have really great options for you if you wanted to do a loan, but have the ability to buy with cash. And so it's kind of like a backed by cash loan. And what it does is it allows you to make a cash offer on a home, but still complete that purchase with a loan. And it gives the seller the confidence that you have someone in backing your loan with cash. And so sometimes a seller, if they know that a loan is backed by cash, they are willing to take less on the sale of that house because they have that guarantee. Whereas they have someone that doesn't have that in their tool belt, and they're just doing a loan, traditional, conventional, or FHA financing, there's always that possibility that the loan could fall through. And then the seller will have, taken their home off the market for 3 weeks, and they've moved all their stuff out thinking that someone's about to close on it in a week. And then all of a sudden it falls apart. So sometimes a seller would be willing to take a little bit less on a house. And so there's different scenarios of why we might encourage you to look at that as a possibility, especially if you are looking in a very still competitive area of Atlanta. We have a Milton watching us from Brazil, and it is 7:30 there. So not quite 7:30 here yet. I guess you're only just an hour ahead of us. Welcome. We are excited to have you watching, and we hopefully can get you here to Georgia. We'd love to welcome you to Georgia. So we appreciate you watching. And as I said, typically I have my counterpart with me, Ashley, here, and she's dealing with that flooding laundry room. Hopefully things are going well for her. We'll have to welcome her back to the live stream next week. And so I am excited that we got a chance to spend this time together. If you have any questions about moving to Georgia or what's going on in the real estate market, I would love to answer those questions for you. Let's see here. Renee says that they just relocated to Monroe, a Target and Starbucks within 5 miles in between, and another in Loganville. Quick, short drive, no traffic. Love the downtown area. Well, welcome to Georgia, Renee. We are excited to have you, and I'm glad to hear that you are happy in Monroe. And it is a really great area. So just a short drive away to get to Target and Starbucks. What is the men's equivalent of Target and Starbucks? I think that would be something interesting to know. I think for my husband, that would be a Home Depot or a Lowe's, or he likes to go to Harbor Freight. Do y'all have Harbor Freight where you're at? It's kind of like a discount tool store. Is that what you would say? Yeah, but I'm interested to know. Leave me a comment and tell me what the male equivalent of Target and Starbucks is, and I'll start incorporating that in my videos to make sure that you know where your closest store is located. Oh, Tractor Supply. That's a good one. But see, your rural areas are going to have a Tractor Supply. They're not going to have a Target and a Starbucks. But that is a really, really good point. Lena says, hi, Sarah. Hi, Lena. My husband and I are working with Ashley. Yay. To move from South Florida to Lawrenceville. I've been looking at homes and noticed a lot of 2-story homes or 1-level homes hard to come by. Oh, this is such a great question. So, when you grow up here in Georgia, you take a lot of things for granted. And you don't realize anymore like the differences in where you live versus where people are coming from. So I grew up in South Georgia and in Valdosta, which is like the last big town on 75 before you get to Florida. I'm sure if you've driven up from South Florida to Atlanta, you've driven through Valdosta. And I thought if you had a 2-story home growing up, like you were rich. Valdosta had hardly any 2-story homes. It wasn't, nothing but ranches. And I had a friend that had a 2-story home, and playing on the stairs was just like the epitome of fun. And now, yes, now that you think about it here, we do have a ton of 2-story homes. And so the reason is it requires more land to go out and build a 1-story home. The footprint of a 1-story home is typically more expensive for a builder to build because of the land, because of the concrete and the foundation. It's cheaper to go vertical. It's much cheaper to go up. And you can fit a lot more homes into a neighborhood going up with 2-story homes. So that is why you see so many 2-story homes in this area. Ranches, single-story homes, ranches. There are lots of ranches. I would say maybe the ratio is probably 30% ranch houses. And you see a lot more older houses that are ranch style. They still build them and they get snapped up very, very quickly. So they are at a premium. You will see sometimes that ranch houses will sell for a little bit more than a 2-story home, depending upon, especially if it's on a basement. A ranch on a basement here is almost like a unicorn. They exist, but they're just far fewer between. And we have seen a lot of families needing multi-generational level living. And so you often see that people are seeking out a ranch on a basement because they have 2 families living in one. And, because of the age ranges, they want single level living for both sets of people. Home Depot and Best Buy. Anthony, that's a great one. Best Buy is also on my husband's thing. He also, I guess in Atlanta, I haven't been yet, thank God. There's a store called Micro Center, sells computer parts, and there's 2 of them in the Atlanta area, and that is like his holy grail of going there. So I don't know what the equivalent of that would be for me, but yes, Home Depot is a good one, and Best Buy. B. Curry says Harbor Freight is popular. Yeah, that's a good one. All right. We are so excited to have spent this time with you. Any final questions? I would love to wrap that up for you. Lena, I'm so happy that we're able to help serve you and help you find your home here in Georgia. And thank you for allowing us to serve you. So we're really excited about that. Well, thank you everyone for joining us on the live stream. We are excited to share this time with you. We got one last question that snuck in here. Let's see. As a first-time home buyer, how much would I have to have in the bank for a home around $275,000? Good question. So it really depends on your financing. So we do have some areas here that we serve that you can get a $275,000 house in a USDA area. And so with the USDA loan, that gives you 100% financing. So you don't have to have any down payment for a USDA loan in a USDA area. Now, you got to be kind of like in somewhat of a rural area. So think like Monroe, some parts of Jackson County, some parts of like North Gainesville will put you in a USDA area. The trick with USDA, though, is that there's income limits, so you can't make too much money. So that's one option. If you are a veteran, obviously that's 100% financing as well, and there are no income limits, so you don't need any money for a down payment. And you can get a conventional loan for as low as 3% down, And then most popular loan for first-time home buyers is called the FHA loan, and that requires a 3.5% down payment. So 3.5% of 275 would be the amount that you would need for a down payment. So you're looking at what, just over $10,000-ish for a down payment, and you're going to need closing costs as well. So whether it's USDA loan, VA loan, or FHA loan, or conventional, a good rule of thumb is to factor in between 1.5% to 2% of the purchase price for the amount that you need for closing costs. That's going to cover like your closing attorney fees and your property taxes and your lender fees, appraisal, all those good things. Now, if you were watching from the top of the video or the live stream here, what we shared, the good thing for buyers right now is that you are able to get, in most cases, you're able to negotiate that the seller contributes some money towards those closing costs. So if funds are low for you, or you don't want to come too much out of pocket, that is something that to consider and think about, that we can negotiate for the seller to cover a large part of that cost. But of course, to get the actual numbers and to know your exact situation and what you would qualify for, it's always best for us to put you with our really, really excellent lenders, and they are excellent at helping you plan for your purchase. A lot of times what we see too is that buyers' interest rates are drastically impacted by their credit score. So sometimes we have people who just need like a 30-point increase in their credit score to get to a much better bracket of interest rate. And our excellent lenders can say, hey, give us a month, pay off this car, do this thing, bring this credit card balance down to this number. And that's going to give you that bump in your credit score that you're going to need to qualify for a much, much better interest rate. So it's never too early to connect with one of our great lenders, and you can just reach out to us. Our contact information is below this video, and we'll make sure that we get that answered for you. Crawlers and Custom says that the Micro Center is great. Can't wait. We don't have any in Miami. Yeah, there's 2 of them. So one, I think, like down in the Duluth area, and then one on the other side near Alpharetta-ish. And so my husband said you can make like any kind of computer, anything at that store, and it's like a mecca of like everything you could ever want. But thankfully I haven't gone yet, because that would not be my jam. All right. Thank you everyone for tuning in tonight. We're excited to spend this time with you. And of course, if there's any questions that we didn't get a chance to get to, our contact information is below this video. We love helping clients from all over the United States relocate here to Georgia, answering your questions. And if you're thinking about selling where you currently are and you need a really great lender, or not lender, a really great real estate agent, we would love to connect you with a really, really great real estate agent there. We know behind the scenes how to dig and get that information to make sure that you are in really, really great hands. Thank you for spending this time with me. We will see you next week. And of course, we have videos that drop every single Sunday about moving to our area. Thank you for joining us, and I will see you next week.